With September being a historically weak month for stocks, what can we expect from here? Joining us now on this, we've got Adam Turnquist. He is the Chief Technical Strategist at LPL Financial. Adam, great to speak with you here. So listen, we're chatting with you on the heels of this softer than anticipated ISM data. To what extent do you think this is a sign of things to come as we head towards that economic data we're all watching, which is that jobs report on Friday here?
Hey, good morning. Thanks for having me. Hopefully we're not getting a flashback of that August 5th week when the market sold off. We had a weak manufacturing print and then, of course, that weak non-farm payrolls report, which will obviously come on Friday. But I think right now the economy is a bit on trial with most of the focus on the labor market. That's going to be the headline event, a drum roll into that Friday morning print, and really going to set the tone for the September rate cuts, whether that's 25 or 50 basis points. I think if we see anything weaker than expected, expect a 50 basis point rate cut. I don't think the market's going to welcome that news, as it did not back in early August. So it's going to be a short but a pretty wild week, I think, here in the markets.
You know, it's particularly interesting, Adam, especially as we're looking through some of the context of this reading this morning, where they added a note saying demand remains subdued. Companies showing an unwillingness right now to invest in capital and inventory due to current federal monetary policy and then election uncertainty. And they added in this kind of tenor that a lot of companies are saying that their inventory levels are just right. So that doesn't necessarily support the need for adding on more jobs in the manufacturing sector. So what does that pass-through mean for the employment situation as well, from your perspective?
At least the employment index or a portion of that did move higher. I think that's a positive sign. But when you look at new orders, a more forward-looking indicator, and that continues to contract, not a great sign. And it's interesting to compare where the ISM data is right now in contractionary territory, with a market trading near record highs, just a few percentage away from those July highs. That historically does not line up. When you have a market within 3% of a new high, on average, that ISM manufacturing data is around 55. So there's an interesting gap between where historically manufacturing is in a strong bull market versus where we're at right now. And again, I think it does suggest maybe we're slowing down. Some of the anecdotes in that survey data are certainly interesting. And it's just more evidence that we're maybe normalizing or slowing down from an economic standpoint.
Adam, prices paid also came in higher than expected, and we're seeing some inflationary themes under the hood of this data print here from the ISM side of things, and we've got that CPI print coming up on the 11th. Are you concerned at all about a reignition of inflation moving forward here, and is that something that investors listening to this should start to potentially position around?
That's not a key concern right now when we look at the economic data. We're pretty comfortable with the trajectory of inflation and eventually reaching close to the Fed's 2% target. I do think it's really about the labor market now. Inflation's moved more to the back burner as we've seen relatively consistent prints that show a deceleration. And with the labor market, there's more volatility, as we've witnessed in some of the data, especially non-farm payrolls, as we witnessed back in August.
You know, Adam, as I'm sitting here looking back in my notes, Bank of America research saying that if we did see another pullback here, one of the key levels technical-wise for the S&P 500 would be 5560. I wonder if we did see a weak September, as history has shown us, and seasonality tends to prevail for one reason or another. This could be the case where we do see another pullback if we also have some economic data readings like this in ISM. What are the key technical levels that you would be watching in that instance?
So right now, when we look on a short-term basis, looking at the 20-day moving average, that's near that level that Bank of America noted. But if we, for example, get, I think, a weak non-farm payrolls print on Friday, I would expect the market to go retest that August 5th low, the 200-day moving average, maybe even down to the April lows around 49.50 on a more volatile type of pullback. I do think we're in for a period of more volatility. That's what the seasonality suggests, the worst month for the S&P 500, not only on an average return basis, but just on a positivity basis, only finishing higher 43% of the time. And what's interesting, when you look at the month on a progression basis, seasonality and that weakness really is a back half story. That lines up right with that September 18th FOMC meeting. So we could be in for a volatile back half of this month as well.
And based on the market reaction right now, it does look like we are turning back the page to the beginning of August in terms of the negative market action that we saw on the heels of the last manufacturing print heading into the jobs data. Where can investors find safety, in your view, amid some of the downward pressure that we're continuing to see across the major averages here?
Right now, as we look at September, our favorite sectors are communication services. You get a bit of a barbell strategy there with some mega cap growth names, but you also have more of those legacy telecom names that can be a little bit more defensive. We also like industrials. Now, that sounds like a more cyclical name, but there's some defensive qualities of the industrials, notably the aerospace and defense area there. And we also like the reshoring theme that industrials is part of, along with its AI exposure with building out some of these data centers. And also gold is always an easy one. Dollar moving lower. We think gold breaking out here is another opportunity. We've been positive on precious metals, notably gold, for a while.
Adam, really good insights here. Thanks so much for taking the time here with us on Yahoo Finance. Adam Turnquist, who is the LPL Financial Chief Technical Strategist. Good to see you.